Hello and welcome back. This is Catherine Morgan-Nance. Part 2 of our video series covers the sales budget and the related schedule of estimated cash collections. Assume the marketing department of Royal Company provides the information on the screen that will be used to prepare a budget for the quarter ended June 30th. Royal sells only one product, and that product has a selling price of $10 per unit. Notice the only budget inputs are the sales price per unit and the number of units sold. As a result, the particular sales budget for Royal is pretty easy to prepare. To calculate the total sales in dollars for any specific period, we multiply the budgeted sales in units times the unit selling price. For example, in April, we multiplied 20,000 units times $10 per unit to get budgeted sales for $200,000. As you can see, Royal forecasts unit sales of $100,000 and total sales revenue of $1 million for the quarter ended June 30th. Double check your math by adding the column totals across to ensure they equal the total quarter column added down. Once we complete the sales budget, we can move on to the expected cash collections from sales schedule. Because all sales at Royal are made on account, the company does not collect all of its revenue in the month of sale. Hopefully this makes sense. In order to prepare the cash budget, we need to predict how much estimated cash collections will be made in each month. That's where some additional assumptions are made. Let's assume the company collects 70% of the sales revenue in the month of sale, 25% in the following month, and estimates that 5% of all credit sales will prove to be uncollectible. In other words, Royal will never ever collect the 5%, so you will not see that amount in the schedule of expected cash collections. And here's another assumption. At the start of the quarter, Royal had $30,000 in accounts receivable that were deemed to be fully collectible. Let's prepare the budget of expected cash collections on sales next. The first step in calculating Royal's cash collections is to insert the March 31st beginning accounts receivable balance of $30,000 into the April column of the cash collection schedules. This balance will be collected in full in April. The second step is to calculate the April credit sales that will be collected during each month of the quarter. We will collect another $140,000, that's $200,000 times 70%, in April. In addition, 25% of April's projected sales will be collected in May, so 50,000 of April sales will be collected in May. And finally, that 5% of April sales will prove to be uncollectible. You don't see that amount here. It amounts to $10,000 or $200,000 times 5%. The uncollectible amount is not shown on the schedule as just mentioned, but would be part of the company's bad debt calculation somewhere else. The third step is to calculate the May credit sales that will be collected during each month of the quarter. We do this just like we did April. We will collect $350,000, that's 500,000 times 70%, in the month of May, and an additional 25% of the $500,000 will be collected in June. Remember, 5% of May sales will prove to be uncollectible. Can you complete the final month of June to get the total expected cash collections for the quarter? Pause the video to see if you can come up with June cash collections. Did you answer correctly? We expect to collect $210,000, 300,000 times 70%, from June sales in the month of June. The final step then is to calculate the total for each column in the schedule and the total for the quarter, which is $905,000. We can add the columns across at the bottom to make sure they equal the total column for the quarter on the right. And notice that these amounts will flow through to the cash budget. Now, let's turn our attention to the production budget in the next video. See you soon.